Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the ruling in the Kwong case and why taxpayers may want to file protective refund claims for the COVID-19 disaster period. We'll be covering this topic in the upcoming session of Spidell's quarterly federal tax update webinar on July 22nd. Get details on this subscription webinar series and register for a full year of updates or just a single session at spidell.com under webinars. As a result of the length of the COVID-19 disaster period, taxpayers may be eligible for refunds of interest and penalties that accrued during the period January 20th, 2020 through July 10th, 2023, following the U.S. Federal Claims Court ruling in Kwong v. United States. Due to this ruling, taxpayers who were assessed penalties or interest during the time period January 20th, 2020 through July 10th, 2023 should consider filing protective refund claims for any open tax years. It's also important to note that the IRS has filed an appeal in this case. The National Taxpayer Advocate's Office provides detailed instructions on how to request relief due to the Kwong decision in its blog entitled Protect Your Potential COVID-19 Disaster Relief Refunds by Filing Formal or Protective Claims for Refund. Although most tax professionals are aware of the IRS's ability to grant a disaster-related postponement period of up to 1 year under IRC Section 7508 Cap A subsection A, Section 7508 Cap A subsection D also provided an independent extension period of up to 60 days during the tax years at issue in Kwong. The Filing Relief for Natural Disasters Act extended the 60-day period to 120 days, as well as renumbered subsection D to subsection E, effective for disaster declarations made after July 24, 2025. The Kwong Court ruled that because the federal COVID-19 disaster period lasted from January 20th, 2020 until May 10th, 2023, this provided an automatic postponement period from January 20th, 2020 until July 10th, 2023, which is 60 days after the May 10th end of the COVID-19 disaster incident. As a result, Mr. Kwong's claim for refund filed February 2023, which was related to penalty abatement claims for the 2007, 2010, and 2011 tax years, was timely filed after the IRS disallowed his claim in September and October of 2020. Although the Kwong case involved the timeliness of filing a suit for refund, IRC Section 7508 Cap A postponement also applies to filing and paying taxes during the postponement period, as well as a host of other filing and payment deadlines for a variety of taxes. This means that taxpayers may be able to contest penalties for late filing, late payment, and estimated tax underpayment, as well as any interest that accrued if the payments were made and/or returns were filed by July 10th, 2023. Taxpayers and their tax professionals should review their tax transcripts now to determine if they were charged interest and penalties during the COVID-19 disaster postponement period and may be eligible for relief. Numerous tax commentators have suggested that taxpayers have until July 10, 2026 to file protective refund claims related to the Kwong case, which would be 3 years from the July 10, 2023 postponement date. The National Taxpayer Advocate's Office has taken the same position. However, while IRC Section 7508 Cap A subsection D directs the IRS to disregard the postponement period, it's unclear whether this disregarded period is tolled or suspended/extended. If it is only tolled, then the statute of limitations period that ended during the postponement period would end on July 11, 2023. This means that a refund claim that would have ended during the postponement period would only be extended to July 10, 2023. However, if the disregarded period is indeed suspended or extended, then the 3-year statute of limitations period would not actually begin until July 10, 2023, which means that the taxpayer would have until July 10, 2026 to file a refund claim. We'll have to wait and see how the courts rule on this issue. However, in the interim, it's important to protect your client's rights now by filing for relief by July 10, 2026. We covered this topic in a recent issue of Spidell's Federal Tax Letter, a monthly newsletter, plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.